Incorporating your trading plan into your overall financial plan. Risk management. This ensures that your trading plan aligns with your overall risk tolerance and financial goals. This may involve setting limits to the amount of capital you allocate to trading and the amount of risk you're willing to take on. Tax implications. Be aware of the tax implications of your trading activities and plan accordingly. This may involve consulting with a tax professional to understand how trading profits and losses will impact your tax liability. Diversification. Avoid over concentrating your portfolio in one asset class or trading strategy. Consider diversifying your investments across multiple asset classes and strategies to reduce risk. Regularly review. Regularly review your trading plan and overall financial plan to ensure that they remain aligned with your goals and market conditions. Make adjustments as necessary to stay on track towards achieving your financial objectives. So let's go back to risk management. We're going to dive a little bit deeper in all of these real quick. Just want to give you some more information on this. So risk management is huge. The most important thing besides knowing how to trade. You want to minimize your losses because everyone loses. So if you could have a strategy where you win more than you lose, that's how you become profitable. For taxes, I'm not the best myself. Definitely contact someone or just to get a basic understanding, do some research, go on YouTube, all that stuff, and then have someone do it for you. So that way you don't have to worry and stress out over it yourself. And you'll kind of know a general percentage to keep off to the side that you'll pay in taxes at the end. Now, diversification, if you're going down that trading, the funded route, you're trading one class, one strategy for the most part. Maybe you have a couple different entries that you do. But for me to diversify, I kind of talked about it earlier. I'm taking some of those profits. I put some away for taxes. I put some towards my long-term investment portfolio, and then the other little bit I pay myself, and then maybe I get a new funded challenge with that so I could grow my trading capital. That's how I'm diversifying my funds. And then review. So you always want to review, reflect, test, and keep on going. That is what we have available for you in our trading journal, or if you just make your own trading journal, make sure you give yourself places to reflect on your trades, on the week, the month, your goals for the quarter, the month, all that stuff, what went right, what went wrong, and you want to keep reviewing and going forward.